Hey guys, you all know that last year I started a playlist, in fact, completed an end to end playlist on project accounting, which is PPM. But there were a couple of topics which I had not covered last year. That is, things like inter project billing or project budgeting. Those were all advanced concepts which I did want to cover and I still want to cover them. But the challenge for that is, when I get an instance, it's just available for a week or two. And for me to do advanced concepts like inter project billing, right? I need to have the setups for two different legal entities and things like that already in the system so that I can just configure the inter project part of it and show you. But that's the challenge I'm facing. I'm not finding such an instance. So if any one of you has an instance which you can share with me, which has all these project accounting configurations already done so that I can do the inter project billing, just let me know and I can, create a video around that. Okay. But today I just wanted to quickly talk through one question which I keep getting asked during interviews or something which I do ask the other candidates also. What exactly is intercompany billing, inter-project billing? There are different terminologies like cross-charging, inter-project billing, intercompany billing, and then there is something known as borrowed and lent. What are all those things we need to understand? Okay, so that's definitely an interview question. Sometimes it comes in certification. Sometimes even clients ask you these kind of questions. So today I'm doing this as part of this FAQ. Okay. So let's just start putting together. I call it intercompany accounting, but very specific to Oracle PPM. What does that mean? It's just like the regular intercompany accounting in GL. When one organization or one legal entity performs a job for another legal entity, then they need to keep track of that information, right? So that is called as intercompany accounting. And you know the concepts on GL, right? Intercompany, intracompany. I'm not getting into that because this FAQ is particular to the Oracle projects related intercompany. Okay. The whole concept of intercompany in projects is generally called cross charging. Okay, that's on the high level. Cross charging means one project is getting charged for another project work or between two different legal entities. That's the general concept. You are charging one company one for a work done by the other company. Okay, and within this cross charging, there are two different types of cross charging. One of them is called borrowed and lent. Borrowed and lent. One of them is called borrowed and lent, and the other one is called inter project billing. Inter project billing. Okay. So although the concept is intercompany accounting in Oracle PPM, you should know that at a parent level, there is a cross charging concept. This is just a concept. And then within that, we have borrowed and lent accounting. And then you have inter project billing. Inter project billing, which is between two different projects. Billing between two different projects. It could be in different legal entities or different ledgers also and different legal entities between US and UK, for example. Okay, that can be possible. But then, what is the difference between borrowed and lent accounting and inter project billing? Let me light the whole thing here. Inter project billing. Okay. So what is the difference between them? Here, there is no exchange of any cash. Okay. There is no exchange of any cash. It's just like, one legal entity tells the other legal entity that I have used your services and I'm going to mark it down. I'm going to give you some credit. That's a very simple thing here. So it just tracks the information like who has used this stuff, and how much it is worth and things like that. And how much it is worth, that concept is known as transfer price. Transfer price. Okay, forget about my spelling. Please ignore that. Transfer price. So for whatever amount the service has been performed by one legal entity business unit for another legal entity business unit, that is just tracked here. There is no actual cash transfer happening. There is no actual APAR, intercompany APAR invoicing being created. All that doesn't happen. It just keeps track of the information. So that's why this concept comes under something called borrowed and lent. This one is just like your legal entity, that is your intercompany in the GL, right? It's very similar to that. So here there are two separate companies which are part of the same big parent company which are involved. Two separate companies or something like two different teams within the same company where the money needs to be moved. So this is an actual cash transfer between two parties involved. This is not an actual cash transfer. This one is an actual cash transfer. So here for actually doing the actual cash transfer, you need to define those using billing rates. There are things like markup rates and there are some kind of special rules. All those additional setups happen here. So generally for your understanding, intercompany accounting and PPM has two. One of them is called borrowed. It's generally called cross charging, but the simpler version is called borrowed and lent accounting, which is not having any cash transfer. And then the other one is called intercompany billing or interproject billing, where there is cash transfer, there is intercompany invoices being created, and there are some additional setups to be done in this case. Okay. So obviously for these kind of setups, there are multiple setups which you will do. There is something known as provider and receiver. Okay. So provider is a project which is providing the services. Receiver is obviously the project which is receiving the services. So we have the provider receiver concept. And then we have to decide whether what type of tracking we are going to do, whether we are going to do a borrowed and lent level of tracking only, or whether we want to create an actual intercompany invoice, that internal billing. That is something we need to do. And then based on that, like I showed you in the playlist, we have to create contracts, we have to create rules and pricing, etc. to support it. Okay. And then we have to set up the system to post the GL accounting entries accordingly. Okay. So that was just a quick FAQ in project accounting related to intercompany. But guys, if you have instance where I can show borrowed and lent accounting or interproject billing, do let me know. I would like to configure that in the system and show you how it works. Unfortunately, I need an instance which is already having projects configured properly and running properly, and so I can just directly focus on this one. All right, thank you so much for your time. I'll talk to you in the next session. Bye.